To the markets now, the JSE looking set to open to mostly positive sentiment after a difficult start to the week, with the focus still squarely on the escalating conflict between Russia and Ukraine. Locally, the focus will be on the budget speech today, with analysts expecting a mostly positive outcome. Jimmy Moyaha is independent analyst, joining us now to talk us through these developments and what is shaping the markets. Jimmy, good morning to you. It is budget day, but it's also the morning after more geopolitical developments. Talk us through how the JSE is performing in early trade.
Morning, Toli. Morning to the viewers. The markets are performing quite flat on the local front. We've seen the Rand hold sort of above a 15 Rand level. We've seen the top 40 sit on a very good support level around the 66,000 points mark. Of course, the focus at the moment, as you rightly mentioned, is that budget speech, but also those geopolitical tensions that are happening in the Ukraine, and seeing how those tensions are going to unfold, particularly with the fact that Iran has now been thrown into the mix with their nuclear deal being back on the table.
Sure. Let's look at the commodities front, and the oil prices look to have taken a breather in early trade after surging to a 7-year high in the previous session. This story is far from over, isn't it? What can we expect from the South African perspective? Does another fuel increase loom?
Well, absolutely. I mean, we've already heard rumors that the fuel price is going to go up by another huge margin come the start of March, and that's already concerning. And this was before oil reached some $97 a barrel highs yesterday. So at the moment, we're definitely seeing that the tensions are going to spill over into not only the South African market, but other markets. We saw the gold price as well reach highs of $1,914 an ounce yesterday. Hasn't been that high since during the pandemic, when it sort of surged towards the $2,000 an ounce mark. And we're still expecting to see that as the tensions continue, the longer the instability continues and the longer it takes to reach talks or to sit down and sort of quell these tensions, the more volatile the markets are going to become, the more tension around the oil prices, gas prices, as well as the gold prices.
Yeah. Let's talk then about the budget speech that's slated for 2 p.m. this afternoon. That's when the finance minister will take the podium. What are some of the market expectations?
Well, I mean, the market would definitely like to see the fiscal reforms that have been alluded to by the ratings agencies, by other analysts, and things that we've definitely been needing for quite some time. Whether or not we will see that remains to be seen. I mean, we've seen in the last couple of budget speeches that there have been a lot of cases where the finance ministry and the government as a whole has failed to address certain key issues that have been on the table for many years now, and we're hoping that this will be the first of many budget speeches to come where those issues are addressed, and the market at the moment is probably poised to just see whether or not we'll hear a tackling of certain issues, certain critical issues around the government debt, around what to do with the windfall of tax collection, around what's going to happen with state-owned entities, the basic income grant, of course. So those conversations that we are expecting to hear about, the market at the moment is not looking to take any positions until we actually see what comes out of the speech and see the direction of the speech, and whether or not that'll potentially be good news for South Africa, or whether we'll have another disappointing budget speech.
Sure. Let's talk company news and the Capitec shareholders approving the revised staff BBBEE transaction. Talk us through those developments.
Yeah, so on Monday before the AGM, there was a revision to the proposed structure of the BEE arrangement. Initially, Capitec had said that they would issue the shares at 50% discount for their staff members, and they would then make available a Capitec loan for assisting the staff members to acquire the shares. Now they've said that they're going to issue the shares at 100% of the opening price. However, they are going to subsidize 50% of that along with the tax costs related to that, and they're still still making those loans available to the staffers. So essentially the deal in principle remains largely the same. They've just structured it a little differently, and they've also outlined that the loan that they're providing to staff members to acquire these shares for their 50% of the portion will only be sort of due after a 5-year lock-in period should any staff member take that up. So the deal was approved. It looks as though all the shareholders are happy, and the deal will increase Capitec's BE ownership indirectly, and will also incentivize the staffers as they've wanted to do.
Yeah, let's conclude the conversation, Jimmy, with private school operator Curo, which has restored its dividend payout after returning to profit in 2021. How are their numbers looking?
Their numbers are looking really good. They reported increase in headline earnings per share, increase in recurring headline earnings per share, a recovery in earnings per share, an increase in revenue. So all in all of their numbers are looking positive. They announced that their special dividend is coming out of retained earnings or cash reserves that they have. Their cash generated from operations has also increased over the last period. So overall, Curo reporting rather good results, and we expect that the share price and the market will receive this positively.
Jimmy Moyaha is an independent market analyst. Thank you very much for your insights on this.